melbourne.com.au. Simon, hello and welcome to the show once again.
Thanks, Kevin. I'm really looking forward to 2020, probably more than any year for quite some time, I must say.
Wow, that's fantastic to hear. Let's find out why. We'll bring up our first graphic. And this probably tells us a lot about the national outlook and what some of the major factors that are going to influence our market this year. Simon, talk us through this one.
Yeah, so firstly, big bold statement. I think that the next 5 years will produce stronger growth for Australian real estate than the last 5 years. And I think that the growth will be much more widespread over the next 5 years than the last 5 years. It was predominantly Sydney, Melbourne and Hobart of our capital cities that grew in the last 5 years, and the others didn't do much at all, and some of those actually lost quite a bit of ground. So I think that's a good thing. That's something for us to look forward to. The big picture stuff that's going to affect much of Australia. We're starting the year with a lot of momentum. 7 out of 8 capital cities finished 2019 in positive growth territory. So that hasn't happened probably since before the GFC. So that's a great way to start a year. The credit tap was already started to be turned back on in 2019, and I wouldn't be surprised if we see some further relaxation throughout 2020 because the national economy demands that. I think that will happen. We're in a situation where large parts of Australia, you can get rental yields of 5% or more. That's our income as an investor, and our expenses, our biggest one's always our debt, interest rates of about 3.5% and probably falling lower. So we're in a situation where investors can be cash flow neutral with a very small deposit as low as 10%. Never happened in any Australian's lifetime. Federal government stability. We don't have a federal election this year, but not only that, it's impossible for the leaderships internally to change because they've passed legislation to say that they've got to stop the internal bickering. Fantastic. Vacancy rates are tight in large parts of Australia, particularly outside of our capital cities, Kevin. Personal tax rates were introduced late last year. Household budgets will be already benefiting from that, and I think we'll see some of that money flush through property markets. First home buyer scheme is, I think, the best government grant for first home buyers probably since the John Howard era of about 2000. So lots of big picture stuff that's going to be good for real estate.
You'd have to say, Simon, I think, and this was demonstrated in our video from last week, and we look back over 2019, Sydney and Melbourne, they had a pretty rough start to the year, but they did actually pick up and they ended quite well at the end of 2019. Why was it, do you think? What were the influences that drove that compared to some of the other cap city markets around the country?
Yeah, my word. Sydney and Melbourne started 2019 about losing at 10% per annum pace and finished the year probably growing at I think they grew by about 6% just in the last quarter. If you annualise that out, you're in 20% per annum territory. But the reason Sydney and Melbourne responded so strongly was the interest rate cuts. What that does, and you can see that in the graphic here, is the Australian dollar falls with the interest rates. And that makes buying properties, if you're a international investor in Australia, it makes it more affordable. And Sydney and Melbourne with the bigger profiles attract that international buyer activity.
Our next graph, we'll bring it up, talks a lot about stimulus. Your view on that, is it a good thing, Simon?
Stimulus is a good thing, but I think buyers in 2020 need to be careful that they do not become blinded by stimulus. Stimulus is manufactured things, and the most recent case study for Australian real estate is when we came out of the GFC, which is of course in 2008. The biggest stimulus package that this country has ever released was in 2009 and 2010. And the purpose of stimulus is to get the economy up in tough times. So of course property markets respond to that, but at some point stimulus has to stop. And when the GFC stimulus stopped, the year after, 2011, 8 out of 8 capital cities declined in value. And the year after that, 5 out of 8 declined again. Of course, what came out after that, Kevin, was Sydney and Melbourne boomed. People need to, I think, be careful of the stimulus that's going to be a positive thing for all property markets in 2020, but it won't be there forever. Decisions need to be made in 2020 by looking at the fundamentals and not getting caught up in the sugar fix known as interest rate cuts. Sydney and Melbourne boomed in 2012 onwards because in the lead up to that they had tight housing supply and their economy then improved. So the smart money in 2020, for those who buy property in 2020, won't be looking at Sydney and Melbourne. They'll be looking at the individual locations that already have tight housing supply, and their local economies are likely to improve.
You mentioned their fundamentals. It's one of the questions that I'm commonly asked, or every time I interview someone, we talk about focusing on the fundamentals. That's why I've asked you in the preparation for this video to tell us what you believe are those fundamentals. You come up with this wonderful graphic, which we'll bring up on the screen now. This is a great way to describe what they are, I think, Simon.
Yeah, the jigsaw puzzle. I describe every property market, every capital city, every non-capital city. It's lots of pieces of information, and it's the sum of all parts that will determine how each property market performs. As I said, a jigsaw puzzle. Some of the most important things that people need to look for, or the fundamentals, is locations that have low building approval volumes. That means low housing supply in future years. Tight vacancy rates is a reflection of tight housing supply. Job growth, whether it's advertising more jobs or jobs that are already created. The outlook for the industries that are important to each town and city needs to be a positive one. Sydney's economic profile is different to Brisbane's, Perth, and various regional locations. Internal migration trends is a good leading indicator as to where people are relocating to. Business expansion plans, those decisions will lead to jobs in the future. So they're the sort of things, when we say fundamentals, that people need to focus on getting that really good quality information and interpreting it.
Yeah, one of those fundamentals you talked about is vacancy rate, and we know that real estate's all about supply and demand, and we touched earlier on the fact that there's more listings, or a need for more listings to come through. But let's have a look at vacancy rates as one of those indicators, because I know that's one that you tend to favour. Next graphic will demonstrate that.
Yeah, and why I've chosen this of all the different graphics we could use about fundamentals is because 2019, Sydney and Melbourne ended the year very, very strongly, and I feel that has the potential for some uninformed buyers to think, well, that's where perhaps there's going to be another boom and the money should go there. The fundamentals suggest that other markets, once the stimulus wears off, have more potential, and this is one of those fundamentals. Sydney's vacancy rates are the highest that they've ever been, and as this graph shows, they're also trending higher. Melbourne's vacancy rates aren't by any means alarming, but they're not trending down. They're not suggesting that housing supply is getting tighter. They're suggesting it's getting looser. The markets that are showing some tightening, Hobart and Canberra, have been tight for a long period of time, and they look like to stay that way for quite some time. But some other locations are coming tighter. Adelaide, Brisbane and Perth, for example. So just one metric, but it's important that people look at the evidence and not get caught up in the sentiment or the sugar fix of the stimulus.
Wow, that's it. And that is a very powerful graph, that one or graphic that you showed us there. Just moving to our next graphic, this shows a point that you make quite often, is that real estate's not about the cap cities. There are lots of regional markets that we should be focused on as well. Let's have a look at this next graphic that sort of demonstrates that point.
Yeah, so if you're an investor, I'd put it to anybody who's listening, where you live has nothing to do with where you invest. It's a different decision altogether. You're not going to be living in it. So you need to be objective about every capital city and every non-capital city. What this looks at here is the last 12 months increases in household rents. Our 8 capital cities are on the left there. And you can see that Hobart's rent grew by 7.1% in the last 12 months. A couple of capital cities' rents actually declined, and all the rest grew, but very little, 1 or 2%. On the right-hand side, we see non-capital city locations that had the highest increase in rent. Wales has grown by 21%. Imagine if you're the tenant paying that. That's a lot of rent. But imagine if you're the investor receiving it. You're going to be pretty happy about that. Some of these locations, Kevin, whilst the rent's already increased significantly, some of them have already seen meaningful property price growth, and others have had the rental growth, and the price growth, I think, will come in 2020. But look at some of the names in no particular order: Albury, Mildura, Surf Coast, Coffs Harbour, Armidale in New South Wales, Warrnambool, Townsville, Launceston, Wangaratta, Shepparton. Where else we got? Mackay, Gladstone, Parks, Murrumba. So all states are beneficiaries there. Now that's just one metric. People shouldn't be making decisions on one metric, but it's a very important piece of information.
Yeah, and it highlights again, just before we go to our final graphic, that that report that's available on your website that I mentioned last week, and we'll mention it again this week, is a really great resource for you to go in and determine for yourself where you should invest, rather than take advice from all of the professionals who do give good advice. But I think you're really much better off if you can make your own decisions. Tell me about that report, and where can we get it, Simon?
So it's the 2020 Property Market Outlook. It's on the Propertyology website. Just go to the Insights tab. It'll be the first or second report that you can download there. All sorts of data, charts, metrics for every capital city, and a lot of information outside of the capital cities. The value in that is it's evidence-based, it's high quality. People can interpret for themselves what they think looks good, rather than rely on what the masses are doing. The masses are often wrong. So look at the good quality information and make a well-informed decision.
Excellent. Okay, we'll take you to our final graphic, and this is just some other points that you might want to consider during 2020. It's very hard to get used to a whole new year, but there it is. Let's bring up our final graphic now. See, these are some of the things for us to keep an eye on, Simon.
Absolutely. Look, and they're in no particular order. We heard a lot in 2019 about concerns in high-rise apartments. Those concerns haven't changed just because the calendar's clicked over. This is a reminder to everybody: be very, very cautious with high-rise apartments, particularly anything that's been built since the turn of the century. I think export growth, whether it's our natural resources, whether it's our various agricultural products, our international students, tourism, they are going to be strong in 2020 with a low Aussie dollar and a number of very valuable free trade agreements in place between Australia and other countries. So focus on which individual towns and cities will be beneficiaries from that, and you'll be on your way to picking some good locations. I think we're going to see some well overdue dam infrastructure projects. We don't invest in dams, but the importance is water supply and what it does to economies. That'll be a good thing. Rental legislation in a number of states will either start in 2020 or there'll be some new proposals, so people need to get their head around that. Regions will outperform capital cities just by sheer volume. There's only 8 capital cities, but there's 178 non-capital city locations. So the odds are in favour of the regions for capital growth and rental growth. I think there'll be some, we know there'll be, I reckon, about $5 billion from various sources of funds for bushfire relief. Whilst it's a tragedy what's been unfolding this summer throughout Australia to the communities affected, there's going to be a lot of money filtering through the economy for some very important rebuilds going on. Yeah. And internal migration, March is when the latest ABS data comes out. Propertyology will be all over that, Kevin, and I promise we will share that with your viewers. And lastly, the mining sector. Australia is a big mine at the end of the day. It had a few years where we were in downturn, but we had 15 years where it was in upswing before that, and I think we're well and truly in the early stages of an upswing again. That's going to have a good impact on property markets. The Queensland state election is the last thing I've put there. That state has disappointed most of us for a good part of a decade, economically and property markets. I think what happens with the October election in Queensland will have a big impact on what actually happens with property markets right throughout the state, not just Brisbane.
Yeah, we're going to see how that plays out. It always does play not so well in the property market. That's the Queensland election I'm talking about, so we'll just wait and see what happens there. Simon, a wonderful insight once again, a great look ahead at 2020. Thank you very much for sharing your thoughts with us. A reminder once again, that report is available at Simon's website, propertyology.com.au, and that's a look ahead at 2020. It's a huge study and full of a wealth of information for you. Simon, thanks again for your time, my friend. We'll look forward to catching up again soon.
Good on you, Kevin. Thanks, mate.